Let's talk a little bit about the ECB, Jeremy, because we heard yesterday from them, of course, and we've written a great piece on the Bloomberg, talks about how there wasn't quite so much volatility in markets this time around these ECB record of the meeting as there had been in December. In December, markets seemed to be a little spooked by the changes in language. This time, the changes in the language about the future changes in the language didn't seem to spook the market quite so much. How quickly do you see the ECB moving towards the exit door?
Well, I think we've taken the view for some time that we thought in the first quarter of this year the hawks would be increasingly ascendant in the ECB, and I suspect we may well see a demonstrative element of that when we get to the March ECB, because I think when we have an upgrade of the ECB forecasts, and certainly even with the slight pullback that we've seen in the survey data this week, the underlying metrics are better than we were seeing in the sort of third and fourth quarter of last year. So if we see that demonstrated in terms of the updated staff forecast, then I think that will start to see the language changing. So the debate about keeping rates well past the ending of QE, I think that language will start to be moderated, and I think that's where markets are going to start to get a little more interested, because this presumption that bond buying is going to continue to September and then maybe a tapering, and then only then would the bank consider changing the deposit rate profile. I think that is perhaps a too slower parameter, and so I think we will see probably the March meeting starting to see the language changing more demonstrably, and I think that will provide additional stimulus for the euro.
But where do you... Yes, so that's nicely into my next question about where you see the euro then, Jeremy. This chart, this is 9643, euro implied volatility rising, but is still lower than yen and sterling implied volatility. And the reason I made this, got this nice message from Ben Eamons at Bloomberg, who was talking about how the minutes from the ECB had talked a lot about euro volatility, as if this was something that had concerned them a great deal, but he was looking at the volatility in the euro relative to other currencies, and it actually wasn't off the charts by any stretch. Where do you see the euro heading and euro volatility? Well,
I think we will see the euro heading higher. I think, if you look at the sort of equilibrium level, and I was looking at our estimate of the equilibrium level of euro-dollar yesterday, and in fact that level is now north of 130. It's around 131. So I think we can see the euro continue to appreciate at a relatively slower pace compared to 2017, but I think we can see it moving into the mid to upper 120s through the course of the next few months. I think from a volatility aspect, well, of course, politics were the big variable in terms of the volatility element in the beginning of last year. I think that volatility has diminished substantially, maybe a little too aggressively in the context of the upcoming Italian vote, and obviously there's still some uncertainties on the German perspective. But I think it is going to be the case that as the ECB provides a steady rate of appreciation in terms of the currency, volatility should remain relatively contained.